So the OCR or the OCR announcement is just like in the media all the time at the moment. But what even is the OCR announcement? Do you even understand this, and what are we talking about here? So first of all, it stands for the official cash rate. So this is the interest rate as dictated by the Reserve Bank of New Zealand. Like every country in the world has got its version of the Reserve Bank, the central bank, and they lend money out to the retail banks, the ones that you do your banking with, and they adjust the rate of that interest rate. And this has a flow-on effect as to what interest rates you pay, and also what happens in the economy. So this is just all it is. The official cash rate is just the rate that the Reserve Bank sets, and they're doing it because they're trying to do certain things to the economy. They're trying to make the economy react in a particular way. So the main mandate, and for the purposes of this video, I'll just talk about their main mandate, is to basically keep inflation between 1% and 3%. It's basically that. So right now, I just had a quick Google just to see what inflation rate we're at in New Zealand right now. And as of December, we're at 2.2%. So right now, we're kind of like exactly bang in the middle pretty much of where the Reserve Bank wants the inflation rate to be. And they've achieved this by putting the interest rates up, which is what we've experienced over the last few years. And then as a result of that, that has forced inflation to come down. And so now they've got inflation to a point where they're pretty happy with it. And so they're going to start reducing the interest rates as a result of that. And then we'll probably start seeing the interest rates that you pay starting to come down, which will mean life is a bit easier for a lot of Kiwi households. So when is the next OCR announcement? Well, I suggest that you do just what I do, because I can't remember all the dates of when each OCR announcement is, so I just Google it. So I just Google next OCR announcement, and I can usually very easily find a Reserve Bank webpage, and you just have to scroll down a little bit, and then you can see when the next one is. So at the time of writing this, the next one is on February the 19th, which is only in 4 days' time. February the 19th, 2025, it's only in 4 days' time. So there's going to be an announcement then, and there's a lot of anticipation on what's going to happen there, because interest rates have been coming down now for about 6 months or so, but maybe they haven't been coming down as much as people hoped or expected. And so another good cut this coming week will maybe make a bit more of a difference, and we'll start seeing lower retail interest rates coming through as a result of that. And this is the way that the Reserve Bank looks to stimulate the economy and get things going a little bit more by pulling that lever of, either putting the rates up or putting the rates down. So what is the Reserve Bank trying to achieve with their adjustments and with this adjustment that they're making this coming week? Well, they're using it really as a lever to try and get the economy pumping along again. And so the economy has been pretty slow in some parts of the country. We've had pretty high levels of unemployment throughout the country. Certain age groups and demographics are being quite hard hit by employment. So this is a way of trying to get the economy moving, and so more jobs can be created and more people can be employed. And so this is really what they're trying to do here by bringing the interest rates down. They're like opening up the economy now. They're saying, great, we've got inflation under control. Let's start getting things moving. And of course, you've got to think that if you think about the average Kiwi in New Zealand, well, they might have their mortgage rates fixed for another 6 months or 12 months or even 18 months. So just because the interest rates are coming down right now doesn't necessarily mean that Kiwi households feel the benefits of that straight away. So there's always there's a lag time. It can be a period of time before this really has a positive net effect, and you start seeing that real change in the economy. But it is going to come. There's going to be interest rates are heading down now. It certainly looks like that. The commentators are expecting another 50 points decrease this coming week. That should flow through to the interest rates that are being offered by retail banks, and this will start putting more money into people's pockets over a period of time, not overnight. It's not like all of a sudden you've got more lower mortgage repayments and more money in your bank accounts. But this will happen over a period of time. And so over the next couple of years, provided this trend continues, of course, then we should start to see, a lot more cash in people's pockets, and then there'll be more spending in the economy, and then this will be good for all the businesses out there that are hoping to create jobs and expand and grow. And so that's really what it's all about. Interest rates are going to come down. People are going to feel more money in their pockets. They're going to go spend more money out there in the economy. Businesses will start being more profitable. They'll start growing and expanding. Business confidence will go up and they'll start hiring more people and employment levels will come down. You just have to be patient. This is not something that happens overnight. That's why you sometimes hear of the Reserve Bank's tool of the cash rate as being quite a blunt weapon, or a blunt tool. It's not precise. It doesn't cause effect straight away. It takes some time for it to flow through, and that's just the nature of the beast. So for most Kiwis though, if you've managed to get through to 2025 and you're still doing okay, and you most likely get the effect of lower interest rates sometime in 2025, then you should give yourself a pat on the back for that. You've weathered the worst of the storm, and I think that in 2025 we're going to start seeing lower rates and stronger employment and maybe some pay increases as well. And so I think you've weathered the worst of the storm, which is great news. Give yourself a pat on the back. You've got through the worst part, and now you can start thinking ahead for this next economic cycle. How are you going to make the most of this situation? And that's what I'd encourage you to do. These economic cycles are, roughly these 10-year sort of cycles, plus minus. And this is when, we're kind of at the beginning of the next upswing, and it might be a 10-year cycle, for example. So this is where you can start planning ahead. Like, don't let the better years go to waste. This is where you start making plans for how are you going to play the next decade? What's your financial goals for the next decade? How can you make the most of a stronger economy? How are you going to play this so that, financially, both yourself and your spouse and your family can get the most out of it? That's what I'm thinking about right now. I'm thinking about, what can I do over the next 10 years so that by the time, that next cycle is coming around, I'm in a really strong position. I know that there's going to be another downturn. Maybe it's going to be in 8 years or 10 years or 12 years from now. No one really knows. But I'm thinking, how can I make the most of these next 5, 6, 7, 8 years so that I'm in a strong position when the next downturn comes around? How can I get both me and my family in a strong as financial position as possible? Now, keep in mind that, I'm not an economist. There's lots of different economists out there that will give their predictions, and largely they get it wrong. Okay, and these are guys that study this all day, every day, and that's all they do. And largely, they still get it wrong. Okay, because lots of things can happen in economies, and it's really hard to predict. And so, one of the things that we encourage people to do at FutureBound is just to kind of take the control, or forget about all these areas of control that are out of your hands. Like, you can't dictate what the economy is going to do. You can't control what interest rates are going to do. You can't control what the Reserve Bank is going to do. There's so much in your life that you can't control, but there's an awful lot that you can control. And this is something that I've really grown our business around and grown my personal financial life around, is what are the things that I can control, because I don't want to lie in bed thinking about what's the Reserve Bank going to do at the next OCR announcement. Like, I take an interest in what the next interest rate cuts or increases are going to be, but out of curiosity, not because it's going to affect me personally or financially. Like, it's more out of a curiosity because it tells me kind of what's happening in the economy, and that helps shape some of the financial decisions that I make for my own life. But long ago, I decided, as a self-confessed control freak, that I'm not going to let these external factors have an impact on my own financial life. Regardless of what's happening in the economy, I'm going to win regardless. And that's been my mindset, and that's the way that I've run my own personal financial life. And I'd really encourage you to do the same. Because if you're like spending your whole life waiting for lower interest rates to come down, how sucky is that? Your financial life is not even in your own hands and in your own control. And so this is why we encourage people to get educated, go down a path of figuring out how are you going to run your financial life, whether it be in good times or in bad times, so that you don't have to feel that anxiety, so you don't have to feel that stress of what's going on in the wider economic world, because, really, it shouldn't matter. Because if you worry about the things that you can control and you do that really, really well, It's enough. So I hope you found this interesting. Follow us if you haven't already, and we'll talk again.
For more financial tips, advice, and education, subscribe to us on YouTube and don't forget to hit that notification bell.